Bitcoin is insane. If you try to match Bitcoin to normal assets, you're going to be wrong, both on the upside and the downside. But I do feel like that this opportunity right now, over the next 5-10 years is exceptionally good in Bitcoin on a risk reward basis, the best it's ever been.
And that is what you consider to be the biggest threat to Bitcoin?
Yeah.
Wow. Hello, I'm Michelle Makori. Thank you for joining us. Bitcoin's rally continues with prices hitting a new record high of over 73,000. Now, the surge is driven by demand for spot Bitcoin ETFs, which are seeing record-breaking daily inflows. My next guest expected these ETFs to be a game changer. He takes a mathematical approach to Bitcoin and says we are in a new era now where we cannot extrapolate from previous cycles. He's also modeled out why he thinks pricing things in Bitcoin is inevitable. Joining me today is Fred Krueger, Bitcoiner and investor. Fred was the CEO and founder of Minds and Machines, a publicly listed company on the London AIM. Fred has had 10 successful exits in the tech sector and also has a PhD in mathematics from Stanford. Welcome to Kitco, Fred.
Thanks for having me, Michelle.
Well, great to have you. And Fred, your work or posts on X caught my attention because you combine mathematics with a career in Wall Street, with a successful career in the tech sector. So given you're a new guest to Kitco, start off by giving our viewers a very brief background.
Well, Michelle, I have a kind of a unique background with this particular task, if you will. And I have a Wall Street background. I spent 6 years on Wall Street and the arbitrage desk of Salomon Brothers and Greenwich Capital Markets. So I was a trader, a prop trader for 6 years and traded really large amounts of money for the firm, for both of these firms. And I'm also a tech person. I've had a number of tech startups and I've been involved in cryptocurrencies now for, 6-7 years. And so I have a very unique perspective. I think that the Bitcoiners heard about these ETFs and they weren't particularly interested in them. They thought they didn't trust Wall Street. They weren't interested in Wall Street. They don't trade stocks. They don't know what ETFs are. And so they underestimated the impact of these ETFs. The Wall Street, they do one ETF per day on average, and they underestimated what exactly Bitcoin could be as just a very special ETF. So I think both of these contingents did not appreciate how special this ETF was going to be, and so I started tweeting about it just sort of randomly in December, and I sort of hit a nerve. Everybody sort of glammed onto what I was saying, and as a result, my kind of Twitter traffic exploded, and I became kind of one of the voices behind this ETF madness that's happened over the last month, especially.
Right. But what I like about your work, as I say, is that you bring it back to mathematics, to economic fundamentals, and you cite various experts in various categories. But let's focus on where we are with the ETFs right now. And we're seeing tremendous daily inflows into these spot Bitcoin ETFs, topping $1 billion for the first time. According to Bloomberg, BlackRock's IBIT saw its own new record of around $849 million in daily flows. So where are we right now in terms of what you expect in terms of demand for these ETFs?
Well, okay, so everybody underestimated the amount of demand for these ETFs. If you looked at the Bloomberg estimates for the total amount of funds that were going to come into these ETFs over the first year, people were saying it was going to be $15 billion maximum for the year. We've actually already had $15 billion of new demand for these ETFs, and the flows are way bigger than anybody expected. I would say than most kind of normal people expected. I was always very, very bullish on these flows because as a Bitcoiner, I realized how difficult it is for normal people to participate in Bitcoin. And this ETF really unlocks this entire asset class to an enormously wide audience. And so I knew that this thing was going to be a hit. And what does a hit mean? I think a hit means $50 billion in a year, right? That's kind of the number. And Standard Chartered, by the way, Standard Chartered had come up with that number, and everybody was ridiculing them when they came up with that estimate. And I think actually it looks a little low right now. So, the flows are going to they're going to increase. The past ETFs are not a great model for, figuring out how much flows that this is, because this is a different animal than, say, even the gold ETF. Right?
So you're saying we can't look at past ETFs for other commodities or assets and extrapolate what that could mean for Bitcoin ETFs? Why not?
Well, okay, so let's just take, for example, gold, right? The gold as an asset class has been around for, hundreds of years, right? And it's been in people's portfolios for hundreds of years. It's people own physical gold. I've owned physical bars of gold from before the ETF, right? So, you could buy gold. You can buy gold on Kitco. You can buy gold. You can buy coins, and you can. In Europe, there's a tradition of buying gold, and it's been around forever, right? Now, if you look at the total amount of gold that's sitting in the ETFs as a result of as a ratio of the market cap of gold, it's only 1.5% of the market cap of gold that's in ETFs. But we're already at 3.5% of the market cap of Bitcoin that's sitting in Bitcoin ETFs, just to give you an example, right? So, and that tells you that these ETFs are really a unique way of owning Bitcoin, right? So if you're a normal investor, you do not want to take self-custody of your Bitcoin. It's just too much work. And, owning it through a proxy, like putting it on an exchange like Coinbase, is also risky, and not having it, in a segregated account. So, for various reasons, this is a very unique asset from this ETF wrapper makes it very, very easy to own. And for that reason, I think that it is fundamentally different from any other commodity ETF. And the other thing to mention is, Bitcoin is a hot new asset. It's 15 years old, right? It already has a market cap greater than silver. It is the best asset class of the last 15 years in every year except for 2. Okay, in every single year. So it's a special asset. The story of Bitcoin is spectacular, and people want to own this asset. And this, for the first time since January 11th, people can own this asset.
Right. I mean, it poses some questions about whether this is contrary to the ethos of Bitcoin, to the real mission of Bitcoin, bringing it back into the traditional financial system, if that's contrary to having it truly decentralized and as an alternative to that system. But before we get into that sort of hypothetical, philosophical discussion, I want to get some of your thoughts on near-term, mid-term, and long-term. In the near term, right? We've got Bitcoin at around making a new high over 73,000. Perhaps by the time this video goes out, it'll even exceed that. What are you seeing in terms of Bitcoin in the near term, especially considering we have the halving in April?
Right. So look, I think everybody's targets for the halving are, Adam Back, for example, who's referenced in the Satoshi white paper, right? And he's referenced Hashcash. He has a target of 100,000 before the halving, and that looked a little high, I would say, a month ago, and now that's sort of looking maybe like it's not too high anymore. So, I would say something in the 90,000 to 100,000 by the halving, which is only a month away, by the way. That's sort of, I think, what most people are hoping for at this point. So that's the near term, right? The the next sort of period that people are looking for is the cycle, right? So Bitcoin tends to work in 4-year cycles. There's a halving cycle. So the next halving is in 2028. So then there's a lot of people coming out with estimates for where are we going to be by the end of 2028, right? Yeah, or the mid 2028. And there, I would say estimates are from, and these are just estimates, of course, but anywhere from 200,000 to it could be as high as 500,000 to even a million, right? By the end of 2028. And then the final target, I would sort of say, is what Bitcoiners call hyper Bitcoinization, right? Which is sort of where do we finally end up with this? And that might be 20, 30 years out in the future. And, a number that people throw around there is, 10 million or $20 million per Bitcoin, right? So sounds crazy. I understand if, we're talking about something that's trading at 70,000 now and saying it could possibly trade at 20 million sounds insane, but Bitcoin is insane, so nothing about Bitcoin is what, matches a very steady, normal kind of thing. This is a crazy thing. And it doesn't, generally you will be wrong if you try to match Bitcoin to normal assets. You're going to be wrong, both on the upside and the downside, right? So it can go down more than you expect. It can go up way more than you expect as well.
All right, but let's try and match it to other assets or other technological developments, because it is a technological development, and bring it into the context of the S-curve adoption model, something that you've been discussing. Yeah. And you sort of compare the adoption of Bitcoin to other technologies, from the internet to cell phones, so forth and so on. So where are we in the adoption curve? Where are we right now in the Bitcoin S-curve?
I would say we're in the very first 1%.
1%? Yeah,
1%. And I would say, just to give you an example of that, and there's a lot of reasons why I say that, right? So if you sort of say, okay, how many people own Bitcoin and who have over 10% or 20% of their net worth in Bitcoin, right? I would say that number is under 2 million right now, worldwide. Okay. We know we can look at Bitcoin addresses and we can say there are 1 million Bitcoin addresses that have 1 Bitcoin in them right now. But a lot of those addresses can be owned by the same people, right? So I own several addresses that have more than 1 Bitcoin in them, for example, right? So I would say there is probably something on the order of 500,000 whole coiners. So in the entire world, 500,000 people. So that's not a lot in a world of 8 billion people. No, that there's 500,000 people who have 1 Bitcoin. And that's, 500,000 people have $70,000 worth of Bitcoin. That's it. If you look at something like America, how many people have accounts on Coinbase in America? Well, there's 10 million people have accounts on Coinbase, but a lot of them have, $50 or $100 on Coinbase. It's not meaningful as a percentage of their net assets, right? So I think we're about to see a complete change in that, right? Which is, how many Americans own stock? Well, there's 100 million Americans own some form of equity right now, 100 million in their IRAs mainly. So there's the amount of people who own Bitcoin is really, really small compared to the amount of people who own stock or real estate right now. I think in a world of really full Bitcoinization or hyper Bitcoinization, as they say, the majority of people are going to own Bitcoin, and it's going to be like cell phones. 90% of people on this planet have a cell phone. 85% of the people on this planet now, or in America, have broadband internet. 85% of Americans use social media. So, I think these trends tend to go to 80%. We're at 1 or 2% right now, and we're going to 80%. The vast part of this journey is ahead of us. It's not behind us. No, I know it sounds crazy because we're looking at Bitcoin has tripled since January 1st of
Right.
23. It's already tripled, right? Or quadrupled actually. It's quadrupled because it was at 50,000. Now it's over 60,000, right? 70,000. So it's quadrupled since that. But that's not crazy for Bitcoin. It's done that many, many times before. In 2017, it went up 20 times in 1 year.
Yeah, and if you look at the timeline of Bitcoin from where it started to where we are now, that's a tremendous growth. And I know you model your expectations for prices, seeing Bitcoin as a power law. But before we get to that, I just want to, push back on this idea that we would have a similar adoption curve to something like a cell phone or internet, because you could make the argument that those are necessary to function, that they have a real utilitarian value. And some would say that, Bitcoin, beyond a store of value asset, doesn't have that kind of absolutely necessary to conduct yourself in modern society. What do you see getting Bitcoin there? I'm sorry?
I totally disagree, and the reason why is you're thinking about it in a too narrow sense, right? You're sort of thinking, okay, well, Bitcoin's this sort of speculative thing that you just buy and hold and make money or lose money, right? There's a lot of people look at it that way, but really, the way I look at it, and the way a lot of Bitcoiners look at it, is Bitcoin is actually the next generation of money, right? And if you really look at gold, was the primary form of money in the 19th century, right? And even up in the early 20th century, the U.S. dollar was backed by gold. So it was pretty much, we had fiat, but it wasn't. It was backed by gold, right? It was sort of partially moved off the gold standard under Roosevelt, and then fully under Nixon, right? But basically, the 20th century was sort of the century of paper money or fiat, right? And Bitcoiners, like me, believe that the 21st century is going to be dominated by Bitcoin as an actual money, right? So we believe that 50 years from now, most things are going to be priced in Bitcoin. When you want to you go to Amazon, you'll be able to buy something in Bitcoin. You want to buy a house, the price will be in Bitcoin. You want to exchange money with some other country, you'll do it in Bitcoin. So we believe that Bitcoin is going to be the future of money, right? And so is money useful? Money is not only useful, it's the most useful thing in all of economics, right? And so, replacing fiat sounds like an incredible thing, and it is, but if anybody can do it, Bitcoin can do it. Bitcoin has a potential to actually replace the dollar, the euro, the yen, the pound, the yuan.
I want to go back to this idea of replacing fiat, but in what you're suggesting, things being priced in Bitcoin in 50 years' time, wouldn't it then need to function as a currency, as a medium of exchange? And wouldn't, for argument's sake, it being locked up in Bitcoin ETFs negate that purpose of it being used as a currency? No. Because when you're exposed to it through, owning stock of an ETF, you don't actually have it. So you're not actually using it as a medium of exchange, right?
Well, okay. So that's again, this is kind of it's a little bit counterintuitive, but it's because Bitcoin is both property and it can be sent. So the way I'd like to break it down, if you will, is compare fiat, gold, and Bitcoin, right? And all three of them there's four characteristics that I would like you to compare them on. The first is hard money. Is gold hard money? Yes, gold is hard money. You can't make gold very easily, right? You can mine it. You can mine 2-3% of it per year. It's very expensive to mine. It's time consuming. You have to get the mines. You have to develop the mines. You have to get it out of the ground. Very expensive. Bitcoin, the mining is similar. It's actually even tougher at this point to mine Bitcoin than it is to mine gold. So both of those are very hard. Fiat is not hard, right? Fiat, the government can print as much of it as they want, and they will. The second criteria is the movement of this currency. Well, fiat, you can move it pretty easily anywhere in the United States. Just wire it around. Even worldwide, you can wire it. It's not perfect for individuals. It's a little cumbersome to wire money, but it's wireable. You can move it. Bitcoin, you can move very easily. Gold, you can't move so much. So on those two alone, Bitcoin is hard money and it's movable. But then Bitcoin has two other huge advantages. One is you can audit it very easily. You can show transparently what's in a Bitcoin address. And then the fourth thing is you can secure it and you can own it in your own Bitcoin wallet. And that's a huge advantage that gold does not have. It's hard to own gold and to take gold with you when you move. To secure gold is more difficult. And Bitcoin is very, very easy to secure. It's relatively easy to hold, to move, and to move across borders. So as within these four characteristics of money, it wins on all of them. It's a better version of money than gold or fiat. And, that's what we're seeing. At the end of the day, that's why it's being adopted, is people are endorsing it as a better version of money.
But again, are you going to be seeing something backed by Bitcoin, or do you anticipate in 50 years' time that people are literally exchanging Bitcoin for goods? Or is it backing?
Literally exchanging Bitcoin. So they can be exchanging a sort of a wrapped version of Bitcoin, right? So you can send Bitcoin itself, right? I can send you Bitcoin on the Lightning Network for next to nothing, right? So I can send you Bitcoin, you'll get it in 10 seconds, and for the cost will be a penny. And I can send you $2.42, and it'll cost me a penny to send it, and you get $2.42 worth of Bitcoin the next minute. But you can also have wrapped Bitcoin, and you can have the Bitcoin is wrapped and unwrapped on various exchanges, and that works too. So you can send Bitcoin, you can exchange Bitcoin. It can be used just as easily as you would transmit digital money on credit cards, and I expect 50 years from now that's going to be the absolute norm. That's going to be the normal thing. That will be how most people settle their bills, will be to pay Bitcoin, I think.
Again, Fred, I like to play devil's advocate and just to push back and hear the counter to that. And listen, you had a good post. You said in 50 years, using fiat for money will be about as ridiculous as seashells or yap stones. And I get your point that we've had for thousands of years gold. The fiat in the grand scheme of mankind is a relatively short amount of time, and that Bitcoiners
the problem is as you know, and your readers know, right? Fiat has all kinds of problems, right? And I think your show,
no fiat supporters here.
I'm preaching to the choir here, right? Because your show and everybody who follows you, they're following Kitco because they know that governments can print as much money as they want, literally, right? And it's not the Democrats, it's not the Republicans, it's not the Americans, it's not the Europeans. Everybody will print money, and that's just the way money printing works.
I agreed, which is why fiat has, been such a problem, and why we've had guests on the show that say central bank printing is akin to modern day slavery, because you're working hard, you're investing your money, you're putting time and effort, time away from your family. Then click, 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 central bank prints more money, and it's stolen that time that you've invested in accruing that fiat currency.
It's a very inefficient way to live, right?
Definitely not a supporter of fiat. But what I want to bring it back to, Fred, is if we're looking at the trend that we're seeing now, it's curious because you're saying gold's in the past, fiat is where we are now, but that's intermediate. And as I said, in the grand scheme of the timelines of mankind, it's a short window. But what do you make of the fact that we're seeing central banks purchasing gold at record levels in 2022, in 2023, and moving into 2024? I mean, are you expecting a similar kind of movement with regards to Bitcoin?
Yeah, I don't expect it in the next, 5 years, but I do think ultimately they will, right? So I think the movement to, like, the Chinese are buying a lot of gold right now. I understand, why? Because there's no reason for them to buy U.S. Treasury bonds anymore. That makes no sense, right? They'd rather have gold. But I think it's only going to be another 5 years before they start realizing that they might also want to buy some Bitcoin, right? So I definitely think that we're headed in that direction, and I just don't expect it yet in this cycle. Bitcoin is only 15 years old. It's a teenager. It's a teenager. It needs to grow up a little bit. And it needs to grow up in market cap as well, right? So at $1.5 trillion, where kind of Bitcoin is right now, it's still only 10% of the value of gold, the total market cap of gold. Now, once Bitcoin gets to closer to the market cap of gold, I think everybody, including central banks, are going to take it a lot more seriously.
Well, there has been sort of intensified speculation that sovereign states could be secretly buying Bitcoin this year. Obviously, we know about El Salvador and Bukele, and he actually, was alluding to something of that nature. He posted something on X showing Bukele shaking hands and exchanging pleasantries with a representative in traditional Middle East attire. The absence of context is fueling rampant speculation. It's believed to be an ambassador to El Salvador from the United Arab Emirates. It's not entirely clear who was meeting with, but it's believed to be Ahmed Hatem Al-Menhali, the United Arab Emirates ambassador to Mexico, also serves as a non-resident ambassador to El Salvador, Guatemala, and Belize. Those countries also potentially looking to move into Bitcoin as legal tender. But fueling the speculation, we've got the likes of Anthony Scaramucci suggesting that Qatar may have added Bitcoin to its balance sheet. Yeah. Bitcoiner Max Kaiser has been making similar speculation. And we also recently had whistleblower Edward Snowden suggesting that this year could reveal that another national government has been secretly purchasing Bitcoin. What are your thoughts on that, especially given that you said you think it's 5 years away that we get this kind of move?
Well, I think it's 5 years away from a major sort of like the ECB or the Federal Reserve buying Bitcoin, right? Okay. I think if I looked at sort of like, Lagarde buying Bitcoin, I think that would be, Lagarde will never buy Bitcoin. Maybe her successor might buy some Bitcoin. But I cannot imagine Mrs. Lagarde buying Bitcoin. I just can't. I can't see her doing an about face and doing that. So, I think we're gonna. It's gonna take a little bit more time for the major Western powers to change their tune. On the other hand, I do think that the Middle East, places like Singapore. Sovereign wealth funds, Malaysia. I think these guys they will be at least dipping their toe even in this year, because I just think Bitcoin is now getting to an asset size where you can't really ignore it anymore. It is an institutional asset. It's backed by BlackRock. It's been okayed by the SEC. I just don't think you can't. You have to get off zero at this point. You're going to have some. Now, the question is how much.
Well, in terms of the U.S. formally acknowledging Bitcoin, I mean, we've got former President Trump and current presidential candidate calling Bitcoin an additional form of currency. He recently told CNBC that he even lets people pay for merchandise with Bitcoin. So he's also sort of had a slight change in terms of how he views Bitcoin as a currency. I hear your point, though, that, it's going to take a while before the ECB starts adding Bitcoin to its balance sheets. But if you have these Middle Eastern countries that we're already seeing are moving away from the dollar as a reserve asset and are also moving away from the dollar in terms of accepting payments for commodities and trade, preferring to use their own currencies and actively saying that they want to de-dollarize. If you see those countries now purchasing Bitcoin as well as potentially purchasing gold. What does that mean for the longevity of the dollar as a global reserve currency? Does that accelerate its demise? How do you see that fitting into the notion of the bifurcation of the global monetary system and what seems to be a growing trend of de-dollarization?
But listen, I think I think America should welcome it, right? So this is, we've gotten very kind of lazy since Reagan. Okay. Reagan tried to have a balanced budget amendment and it was never passed. And, we've had 40 years of being, quite frankly, a little bit sloppy in terms of running deficits and not accounting for things properly and, counting on Social Security and things like that to make up the difference. Right. And, I think that Bitcoin is going to drive America to become more of a solid citizen. And that's probably a good thing, right? So I think having some pressure is not a bad thing. I think we can absolutely be more fiscally conscious and run a tighter ship on government without going down into the abyss. I think this is a good thing. It's it will put more financial discipline on America. And I think it'll be obviously great for people who buy Bitcoin at this point, but I think it's an inevitable thing at this point. This form of hard money is not optional. It's going to take over. The game theory is too strong, and it's inevitable. So it's not like I'm trying to persuade people to do it. I think it's going to happen whether I want it to happen or not. And so I think you should just get on board.
Well, on the point that it's going to force discipline, right? That it's going to curb central banks' abilities to print so recklessly. We have Larry Fink, who was a Bitcoin denouncer not too long ago, stressing that, he does think it has a lot of merit and is a great store of value. And he was saying that it's particularly appealing and useful for people who are fearful of their government or see their government as having too much debt or devaluing currency, which is practically every government out there. But this idea that Bitcoin is a store of value that is a challenge to central banks, they may embrace it and they may take on the discipline that comes with it. But there's also the concern that that's exactly what could lead to Bitcoin's demise, that could be an existential risk to Bitcoin. Now, you mentioned, obviously, the SEC has approved the spot Bitcoin ETF, and that's released some of the regulatory concerns. But can you comfortably say that you no longer see government regulation or government banning as an existential risk to Bitcoin?
It's not an existential risk at this point because Bitcoin itself can live even if banned by a country the size of the U.S. It's not going to stop Bitcoin at this point. China banned Bitcoin, and Bitcoin price, that was in 2020, and it's done fantastic since then. So, the U.S. can get in the way, right? The U.S. could put a tax on Bitcoin miners. They could potentially put a wealth tax on people owning Bitcoin. The U.S. could do a lot of things that would not be good for Bitcoin. And I hope they don't do those things. I don't think they will, because I think that within a couple of years, a lot of Americans are going to own Bitcoin, and they're not going to want to have that happen to their 401ks. So I think a lot more people are on Team Bitcoin right now than that were on Team Bitcoin even a year ago. So I don't see an existential risk right now. I do think that the reward is there's never no risk. Every investment has risks, including gold, right? But I think that the risk reward ratio here is very, very attractive for Bitcoin, and I'm very positive.
Well, we're definitely getting that. We're definitely getting that. But again, just to push back here, Fred, I mean, there was a time when it was illegal to own gold in the U.S. between 1933 and 1974. you couldn't own gold. Roosevelt signed an executive order that essentially criminalized the possession of gold, and citizens had to deliver their gold coins, their bullion, and certificates to the Federal Reserve. If not, there were severe penalties for that. So whilst it may not be banned entirely, you mentioned that you think it's not implausible that the U.S. at some point takes a harsh position towards Bitcoin, or even if that means taxing it more.
There's the infamous 6102 executive order, right, where they basically, under Roosevelt, started basically criminalizing the private possession of gold. I don't see that for Bitcoin, and I think that Bitcoin is now. It's going to be hard to reverse back these ETFs and to start saying that Bitcoin is illegal. I think these ETFs make it a lot more difficult. I think that once you have tens of millions of people that own Bitcoin, and MicroStrategy being part of the S&P 500, which I think it will get to, I don't think we're going to go back to criminalizing it. I could be completely wrong, but I don't worry about that. That's not something that I worry about.
So government regulation, not something you're too concerned about. Is there anything that you do still see as a potential major risk to Bitcoin? Be it a hack, be it quantum computing?
No, I think the major risk actually is probably Ethereum, right? So, look, the Bitcoin right now is benefiting tremendously from having it being the only ETF, right? And the fact is, as I predicted, I think Wall Street loves this. Wall Street loves Bitcoin, right? TradFi loves Bitcoin now. But TradFi could easily be also talked into buying Ethereum. I don't think they're going to buy it as much as Bitcoin because people tend to go for the number one, not the number two. But I do think it's somewhat of a risk. I think it'll be somewhat dilutive to the Bitcoin story to have an Ethereum ETF. And that's why I've been very sort of vocally anti-Ethereum ETF.
But you see that as a short-term risk in terms of volume and demand in the near term. Or do you see Ethereum challenging Bitcoin's position as digital gold, as the store of value, as this ultimate unit of account that you're projecting in 50 years? Do you think Ethereum could replace Bitcoin in that context?
A lot of people are very confused, right? So if you go back to the 20 bull market in crypto, it wasn't actually Bitcoin that was leading this. It was stable coins that paid high yields. So if you remember, in 2020, interest rates were zero. But companies like Celsius and BlockFi were offering 7% on stablecoin yields, and Terra Luna was offering 20%, right? So, of the $50 billion that went into crypto, quote unquote, in 2020 and 2021, 30 of those billion went into stablecoins, and they went into Celsius, BlockFi, Terra Luna. So more than Bitcoin, I would say.
I see that you're suggesting that Ethereum could be a short-term distraction in terms of TradFi inflows to Bitcoin potentially. But in terms of where you see Ethereum as a store of value asset compared to Bitcoin, you're not suggesting that you see Ethereum taking the similar sort of hyper-Bitcoinization role, store of value asset, unit of account, ideal form of money. You don't really see it as a challenge to Bitcoin in that context in the long term, or do you?
What I tell you is that it's the number one competitor, right, to Bitcoin. And so if you look at, if you're Google, you look at, okay, who's my number one competitor? If you look at Amazon, who's my number one competitor? Maybe it's eBay. Okay, I don't know. There really isn't almost any at this point. But, I would say they're at least in the mix, right? They're competing.
But wouldn't you say that there are different properties? I mean, Bitcoin, finite supply, completely decentralized. You don't have Vitalik over there controlling Bitcoin as he does ETH. I mean,
Right.
there are a lot of properties of Bitcoin that make
Well, I
it.
mean, I'm completely on Team Bitcoin, right? I'm 100% on Team Bitcoin. I don't own any Ethereum at all. I'm just saying, as Gore Vidal said, it's not enough to win. Your competitors must also lose. So, I mean, I don't mean Ethereum too bad, but I kind of would like to see them lose. And so, I'm for a pure Bitcoin world, and I don't love competition. So, I think it's better if we're the only game in town. And so, yeah, I'm just calling it out like I see it.
That you do think
there's-
Ethereum could be the ultimate store of value over Bitcoin?
I think it's very unlikely. Okay, but I do think that they could make things a little difficult for Bitcoin. And there's a lot of people who are, Wall Street, and even people like Larry Fink are not anti-Ethereum, right? They're kind of buying into some of the aspects of Ethereum. So I wouldn't rule Ethereum out.
So in what scenario do you see ETH taking over Bitcoin's role, dethroning Bitcoin? How would that play out?
Well, the way it would play out, and again, this is a very dark thing for a Bitcoiner to think about, right? But Ethereum has more programmability than Bitcoin, right? It can move things, it can program things. So if you really want to do the full area of tokenization, so tokenization of real world assets. And tokenization is something that Larry Fink talks a lot about. BlackRock talks a lot about as sort of their ultimate end game, right? Is tokenization of stocks, tokenization of real estate, right? Well, that's not really possible on Bitcoin because Bitcoin doesn't, as a network, is not programmable, right? There is a Bitcoin script, but it's not a fully expressive programming language like Ethereum is, or Solana is, or there's a lot of blockchains. But if that is the main thing, you could make the case that Ethereum has a chance because it is much more programmable than Bitcoin. I can't fault them on that. They do have that. That is the main innovation of Ethereum. But they gave up a lot to get there,
And that is what you consider to be the biggest threat to Bitcoin.
Yeah.
Wow.
I think Ethereum is the biggest one.
And yet, Fred, you are advocating against diversification. In many of your posts, you're saying this is the apex predator. Don't diversify. Go with Bitcoin. You cite Michael Saylor has a single position, strong conviction positions are the way to go. Right. That's what Michael Saylor has done. It's worked out for him. You think ETH could be the challenge to Bitcoin, but you're against diversification, or at least posting that one shouldn't.
I think you have to pick your battle, right? So my view, I have the exact same view as Michael Saylor. Really, there isn't any second best. ETH is the second best, but it's such a low second that I don't really view it as a true competitor. I think Bitcoin will crush ETH ultimately, and I think ETH is more or less going to zero against Bitcoin, more or less, right? I don't think it's going to zero, but I think against Bitcoin, it's going to not do well. Because I do think in the end, there's one ring will rule them all, as they said in the Hobbit.
Lord of the Rings, yes. One ring to rule them all. How confident are you that Bitcoin is never going to zero?
100%.
100% confident. What narrative creates a pullback? We had the Terra Luna collapse, we had the FTX scandal. What sort of narrative can you envision that creates a major pullback in Bitcoin? Or is it a macroeconomic development that could perhaps impact Bitcoin? What do you think is likely or possible to derail this current uptrend?
I don't think there is anything. And the reason is going back to something you talked about at the very beginning is these power laws, right? If you take the Bitcoin price and the time since the first Bitcoin block was mined, right, which was in January of 2009, and you look at both of those numbers on a logarithmic scale, you will see that we get an absolute straight line. I mean, there's variation around that straight line.
Fred, we're going to pull up the charts that you posted showing Bitcoin as a power law. So break that down for us. Talk us through that.
Okay, so this chart was discovered by an astrophysicist named Giovanni, and when you're looking at things in astrophysical time frames, you need to look at things that are very small or very small, and then things that are very big, like the distance of the size of the Milky Way, right? So you tend to look at things on a logarithmic scale. And the way of representing relationships in this so-called log space is very natural for physicists. And so it's not crazy that a physicist would have first seen this relationship. So if you look at that graph and you look at the price of Bitcoin in the logarithm of the price of Bitcoin, and you look at it in relationship to the logarithm of the time elapsed since the Genesis block, you will see that it sort of wobbles around a straight line right from the very first year of Bitcoin to now. And that straight line means that because the straight line is in log space, right? That means that the actual price of Bitcoin is roughly time to the power 6. Okay. Now, you would sort of say, well, that's exponential. It's not exponential. What it is it's a polynomial, right? It's a 6th power. So you know what a parabola is. Parabola is like x squared, right? A cube is even more faster. The cubic is even more fast than a parabola. It's x to the cube. Well, this is x to the power 6. And that's roughly how much Bitcoin price goes up in time. And I can put that in complete perspective because I was asked to explain this. Somebody was asking me this earlier today, and I was like, well, let me give you an example of what that means. We've been in Bitcoin. Bitcoin has existed for 15 years now. Where will Bitcoin price be if the same pattern continues in another 15 years? Will it be double the current price? No. It'll be 2 to the power 6, the current price, which is 64 times as high as it is right now. Right? So that's what a power law says, that if you double the amount of time, you get 2 to the power 6 higher in price. So 64 times higher in price. Now, that seems crazy, but that's exactly what Bitcoin has been doing over the last 15 years. I mean, exactly.
So in 15 years' time, Bitcoin at 70,000 times 64. I can't do the math in my head, but that's your price target.
Yeah, I mean that's it's around 4.5 million roughly. I mean that's kind of what a power law says, right? So a power law says you're going from 70,000 to 4.5 million in 15 years. Now, again, you could sort of say, well, that sounds crazy. Why is it going so much? Well, it's not totally crazy. I mean, the price of Amazon has gone up 100 times over the last, the price of Apple computer has gone up 100 times since they released the iPhone. That was one of my biggest mistakes, I think, was I bought shares of Apple when they released the Apple iPhone. I sold them 3 years later at the price doubled, right? Now, had I held them, I would have made 50 times more money than I had by selling them 3 years later, right? So you tend to underestimate how much these things can go up, right? Nobody thought that Apple released the iPhone in 2007, right? Nobody thought that we'd be, 100 times higher in price than they were in 2007. It's just insane, right? But yet, these technological advances can move 50, 100 times over 20 years. And I do think we're going to go 50 times higher in Bitcoin over the next, 15, 20 years. I do. And that might be it. That might be more or less it. It may go up a little bit more than that, but I do feel like that this opportunity right now, over the next, let's call it next 5-10 years, is exceptionally good in Bitcoin. Probably on a risk reward basis, the best it's ever been, right? Because we've now got this ETF, it's all a question just of adoption now. The mechanism, everything is just ready to go. We don't have to invent new things. We don't have to invent new wallets or, convince some Middle East nation or anything. It's just, we just have to get normal Wall Street people to go click on IBIT in their, and their Charles Schwab account. It's all there ready for them to buy. So we've never had it this easy, and the adoption can really happen right now at record speeds. And that's what we're seeing right now. And so it would not at all surprise me that the next year is just going to be a banger year for Bitcoin. Now, could we have some drops? Yeah, Bitcoin can drop 10% in a day, right? And it did that the other day, right? Absolutely, it can do that. Now, in my particular case, that's not a reason to not invest in Bitcoin. I think you want to be involved in Bitcoin, even though it can have 10%, 20%, days, and because I think if you look over a couple of year period, it's going to do extremely well. But it's going to take some fortitude, and it's not for the faint of heart, right?
Well, I suppose if you buy and hold, and as you say, not trying to time it, not trying to sell on the upside. It's an approach that many have, but if you just buy and hold, and then it doesn't require such a strong stomach. But I want to hit on what you said in 15 years' time, because that's a number. How do you adjust for inflation with that? How do you, again, you're pricing it back in fiat, and we're seeing declining purchasing power of the dollar and, continued devaluation and debasement of fiat. How does that equation then factor in?
I think actually, if you look right now today, nominal inflation is pretty low, right? So nominal inflation today in 2024, I like to look at trueflation.com. It's a pretty good site. And I think the last time I looked at it, we were below 2% or just about 2% in sort of the basket of goods. So I think relative to consumer price inflation, I don't expect consumer price inflation to be extremely high over the next 10 years. What I think is likely to happen is more of what we've had before, which is asset price inflation is going to go way up because the government prints all this money. And where does the money go? Well, it doesn't go to buying things necessarily immediately. It goes to buying assets, right? So house prices go up, gold prices go up, S&P PE ratios go up. It's harder and harder to buy a house. If you're a millennial right now, it's, forget it.
Yeah.
You have no shot. I own I own quite a bit of real estate, but it's like, if I was a millennial right now and I was, 30 years old, and even if I have a pretty good job, how am I going to figure out how to find, to buy a $3 million house in LA? And that's not a super fancy house in LA, and the house prices in Vancouver, they're not cheap either, right?
I'm here in New York. I know all about it. Yes.
Right. So look, it's just like, I think, why are home prices so high? Why are S&P prices? Why is Apple Computer and Facebook and these companies worth so much? It's because of money printing, right? Because they are, at some point, all this money goes into assets, right? It finds its way into assets. And I think that's the biggest drawback, right? Is, competing with the Joneses. If you get, there's one inflation rate for people who are at sort of the lowest end of the economic ladder, right? And then there's another inflation rate for sort of middle class and upper middle class people. And, a lot of upper class, middle class people, they look at, housing prices as a proxy for inflation, because maybe they want to buy a second home. Maybe they want to buy a first home, right? They're renting, they want to buy a first home. And, they're continuously monitoring those house prices. And those, I think, could go up quite a bit, especially if we keep on printing money. So that's, I think, the biggest risk. But I do think, look, you're talking about something that could go up 64x over the next 15 years. Maybe if you have 7% over a decade, that's going to double, right? That's the rule of 72, right? So you have 7% inflation over 10 years will double the price in 10 years, right? So, in 15 years, you could see a 2.5%, 3 times the price. Maybe that's at 7%, but you're probably not going to see that in consumer prices. So, you can just sort of normalize to today's dollars. I would say $20 million. A coin is kind of where we finally end up. Maybe in future dollars, it's 50 million. I don't know. But look, I think the key thing is I think we're getting to $1 million a coin, right? $1 million per Bitcoin. I believe that. I think we're going to get there.
But a lot sooner than in 15 years, $1 million a Bitcoin. Well, what's the price projection for
our
that?
law says you will get there in 8 years, right? That's 8 years. The power. 8 years, right? So that's kind of, if you just follow the curve, it says you'll get there in 8, right? Now, a lot of Bitcoiners I know say, no, Fred, you're way too bearish. It's going to happen before 8. And they're saying because of the ETF. And I'm not saying I completely disagree, but I just think if you said, Fred, are we going to get to $1 million within a decade? I'd say probably, probably. And if you believe that, that's enough, right? All you have to do is have 10%, 15% of your portfolio in Bitcoin, and you're going to do great, right? And you can probably, having 10% of your portfolio in Bitcoin is not going to cause you to lose sleep, right? If you're like me and you've got, north of 50% of your net worth in Bitcoin, right? You care about it a little bit more, right? It's a little bit more of an adrenaline rush, right? But if you have 10%, 5% in your portfolio, maybe that 5%, 10% goes to 20% with the price appreciation. But it's not the worst. It's not a crazy risk,
Right. Not financial advice, but between 5 and 10% of your portfolio in Bitcoin. Just as we wrap up here, I want to bring Bitcoin in the context of a central bank digital currency, because you mentioned the ECB, you mentioned Christine Lagarde, you mentioned she's not going to go for Bitcoin, but we do know that they're aggressively pushing a central bank digital currency. How do you see those dynamics playing out? Can you have a Bitcoin world with a central bank digital currency?
Yeah, absolutely you can. Bitcoin is not just about what it's not is just a payment technology. That's not what it is, right? It's a savings technology. And your electronic versions of the euro, they're going to have the same performance relative to inflation as just your regular old euros, right? So it's probably not a great idea to use central bank digital currencies to save in. As Michael Saylor said recently, there's a word for people who save their money in fiat, and that word is poor, right? Because rich people don't keep the vast majority of their money in fiat. They keep it in property. They keep it in equities. They keep it in houses. They keep it in gold. They keep it now in Bitcoin. So, if having a central bank digital currency, fine, no problem. It's an alternative to cash. I think it won't even be that big of a deal. I think it's doesn't really matter. I'm against it because I don't love the fact that they're going to monitor everything I do. So I'm not in favor of the central bank digital currency. I don't like it, but it's not going to be competition to Bitcoin at all, because
on the contrary, does it boost the value of Bitcoin? Does it boost the appeal of Bitcoin? Because it's
I think it's going to be a stepping stone, but I think Bitcoin's going to do so well before that central bank digital currency ever gets off the ground Like Bitcoin will already be at $500,000 a coin by the time that the US has a central bank digital currency. I mean, it's going to be way too late, right? I mean, we're at 70,000 a coin right now. We were at 38,000 on December 1st. We were at 16,000 on January 1st of last year. I mean, like we're going to be at 250,000 a Bitcoin, and people will still not be putting the finishing touches on this central bank digital currency. So they can talk all they want about this, but that's not going to. People are not going to slow down and not buy Bitcoin. People are going to buy Bitcoin right now, because why wait? Why wait? Do you want to get rich? Yeah, I do. I mean, I'm already rich, but like I want to get richer. It's sort of like Michael Saylor said. This is a game. And whoever has the most Bitcoin wins the game. That's it. It's a zero-sum game. Whoever has the most wins. And the great thing about Bitcoin is you can tell how much Bitcoin is there, right? And I know for a fact there's only a couple thousand people who have more Bitcoin than me in the world, right? Because I can look at the Bitcoin addresses on chain. When I'm looking, I'm going, oh, great. I'm in the top, top couple thousand here, So that's a good place to be. It's a good place to be. So, Mr. Saylor, obviously he's in a completely different league. He's in the top 10, Bitcoin holders in the world, right? Or top 5, And so now he's sitting there going, well, okay, I own all the Bitcoin. So great. Have fun with your digital currencies. And look, I think that's the thing. Once you understand this dynamic of Bitcoin, you become obsessed with trying to get as much as you possibly can get, subject to your risk appetite, and not just kind of it just ruining your life. Obviously money's not everything. So, but you become very focused on Bitcoin, and I think I am, but a lot of other Bitcoiners are as well. And we love our Bitcoin. Don't take our Bitcoin away from us.
So even at 73, still buy more Bitcoin, because whoever has the most Bitcoin wins. Fred, we're going to leave it at that.
Is going to be in retrospect. Is going to be people are going to look back on that day when Fred Krueger and Michelle were talking, and it was only 73. That's what they're going to go back.
That's how I feel about it when I was talking when it was 16 after Terra Luna collapse and FTX, and then but yeah, 73 still a good jumping in point in the very grand scheme of things. Whoever has the most Bitcoin win, but money isn't everything. Fred, really enjoyed our conversation. Thank you so much.
Thank you, Michelle. I really enjoyed it, and thanks for having me on the show.
Our pleasure.
Talk to you guys later.
Thank you so much.
Bye.
Thanks again to Fred Krueger, and as always to our Kitco viewers, thank you for watching. If you are watching us on YouTube, make sure to subscribe. For me, Michelle Makori, and the rest of the Kitco News team, we'll see you soon.